Hello, welcome to the European Open briefing for Friday, June 1st. I'm Rafi Bajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So the US has decided to go ahead and impose tariffs on its key allies, the Canada, Mexico, and the European Union. Despite that, though, there's fairly limited reaction in financial markets. The yen continues to head lower on the back of the receding risks concerning the political situation in Italy. The US dollar is firmer this morning, and the euro rebound has appeared to have come to a halt. The main casualties of the latest US action with regards to tariffs appear to be on the Canadian dollar and the Mexican peso. The main focus, though, later today will be the US jobs report. So let's get started by having a look at the US dollar. We can see dollar yen has rebounded slightly from those lows earlier in the week, where it came close to dropping below the 108 level. It's now rebounded to just above the 109 level, mainly on the back of a weaker yen, which had gained strongly early in the week due to the escalating political crisis in Italy, which now appears to have been resolved. But we've got fresh uncertainty with regards to trade. The US has decided not to extend the exemptions for Canada, Mexico, and the EU from the steel and aluminium tariffs. Canada and Mexico have already announced retaliatory measures. So although this poses the risk of the further escalation in trade tensions and the possibility of full-blown trade war, we're seeing market sentiment broadly improving this morning, mainly because of the receding risks in the Eurozone. We're seeing the dollar index recovering from yesterday's one-week lows when it hit 93.72. It's now recovered back above the 94 level, and although we did see a big drop in equities in Wall Street overnight, Asian stocks were mixed this morning, and we are seeing a positive open in Europe. But of course, if the trade situation does escalate further, we could then start to see a stronger impact on financial markets. But the immediate focus, though, will be the non-farm payrolls report out of the US later today. We already saw a big increase in personal consumption in the US in April in yesterday's data, so that also supported the greenback yesterday. Let's now move on to the euro. We can see that strong recovery for the euro from those 10-month lows of just above the $1.15 level. It did briefly rise to about 1.17 before easing slightly to around 1.1690. We didn't see much of a boost, though, from much stronger than expected Eurozone inflation figures yesterday. The flash inflation reading for May rose to 1.9%. Expectations were for 1.6%. So the main headlines this morning are that the anti-establishment parties in Italy, the Five Star Movement and the League, have finally reached an agreement to form a coalition government after finding a replacement for their choice of economy minister, who was a Eurosceptic, which Italy's president rejected. They've now picked a more pro-Euro candidate, and he has been approved by Italy's president. We're seeing a big drop in Italian bond yields, but overall, though, we're not likely to see those risks disappearing completely, as the Five Star Movement and the League parties are still populist parties, and they're now going to be the first populist party coming into power in Western Europe. We also have some political uncertainty in Spain. Spain's Prime Minister Mariano Rajoy looks set to lose a vote of no confidence later today, and he will likely be replaced by socialist leader Pedro Sanchez. But overall, though, there doesn't seem to be too much panic in financial markets regarding Spain. Quick look at the pound, because the pound, although it did recover along with the euro yesterday, it didn't really, the recovery wasn't that strong, and we're seeing the pound now retreat to just below the $1.33 level. We do have UK manufacturing PMI coming up later today, so that could bring some volatility to sterling, but although the pound is being weighed by renewed Brexit uncertainty, the UK government is reportedly considering giving Northern Ireland a joint UK-EU status in order to resolve the impasse over the border issue with the Republic of Ireland, but we don't know whether or not the EU is going to approve this, and time is running out for the UK ahead of the June 28th summit, where the UK government needs to present in detail what kind of a relationship it wants with the EU once it leaves the bloc. Let's now take a look at what's happening to the Canadian dollar and the Mexican peso, because they bore the brunt of Trump's decision to end that exemption from US steel and aluminium tariffs. The Canadian dollar has reversed the gains it had made earlier in the week. On Wednesday, of course, the Bank of Canada, in their statement at the end of their policy meeting, they sounded much more hawkish than the markets expected. We saw the loonie dropping to the loonie firming to around the 1.28 level against the US dollar, but now it has weakened again towards the 1.30 level due to the rising risk that NAFTA could now be terminated given the escalation of tensions with the US. We also had disappointing GDP numbers out of Canada yesterday. Annualized GDP growth slowed to 1.3% in the first quarter from 1.7%, missing forecast of 1.8%. And if we have a look at the Mexican peso, we can see the peso falling to 15-month low of just over the 20 level to the US dollar, and again that's mainly due to the growing risks now that the growing risks as to what's going to happen to NAFTA following the US decision not to extend those exemptions for the metals tariffs. And finally, quick look at the Australian and New Zealand dollars. We can see both currencies fairly steady, though they don't appear that seem to have lost some steam following gains earlier in the week. We did see more positive Chinese manufacturing data out today. Yesterday we had the official manufacturing PMI beating expectations, and now we had the private survey from Cash-In. Their PMI also beat expectations in May. Australia's own manufacturing PMI, though, saw a drop from the prior month. We do have GDP numbers coming out of Australia next week, as well as RBA meeting, so those will be very important for the Aussie and will determine whether or not the Aussie will be able to extend its gains or reverse lower. The Kiwi, on the other hand, is holding fairly steady above the 0.70 level against the US dollar, despite the fact that we had terms of trade figures missing expectations out of New Zealand this morning. So New Zealand's terms of trade deteriorated mainly on the back of weaker dairy prices. And a quick look at today's economic calendar. So the focus will be on UK manufacturing PMI and the US non-farm payrolls report. We're also going to have ISM manufacturing PMI from the US as well. That's it from me. Thank you very much for watching and have a great day.